Hi, how's it going? Welcome back. Once again, we're here, joined together on this lovely Sunday evening. Just saw the news. Potentially, they're ending a shutdown of the shutdown, right? Well, honestly, when everybody that flies in an aeroplane is going to be affected, yeah, things are going to start moving. All these representatives are going to start feeling pressure, and enough of the games and the pro wrestling, I guess. But hey, we flew. We went to Vegas, and it was okay, and we escaped some of these delays. But yeah, for those of you that are in there in the chat already, talk about Mr. Pibb. Why did he put Mr. Pibb on there? Why didn't he put Mr. Pibb? I'm not a soda drinker, but I dug it. Like, I'm a kid of the 80s, and I was a teen in the 90s. But Mr. Pibb is owned by Coca-Cola, ticker KO, and Coca-Cola currently has I should have looked this up, about 3-ish dividend yield. By the way, thank you for joining us and tuning on in. Coca-Cola has well, here, I'll show you instead of telling you, just bring you along, right? It'll be a little bit better. Coca-Cola, ticker KO, 2.89% yield. Is that yield too low for you? It's funny, during that last video I did, I got a comment from somebody about, because I shared Ross Stores, ticker ROST, and they were like, yeah, I don't care if they cut the dividend for any reason, that's an automatic never invest in that company. And I was like, dude, the government literally told them you have to shut down your stores. You cannot operate your business indefinitely. So, and even then, apparently they're like, yep, nope, doesn't matter. I'm like, well, it's a once in a lifetime event that never happened before. But anyway, there it is, Coca-Cola. So they own Mr. Pibb, right? So they are bringing it back. And what's their dividend growth? Slow. 105 years uninterrupted dividend streak for Coca-Cola, 62-year dividend growth. They're dividend king, but that dividend does grow slow, although they did raise it 5.2%, which was more than it has recently been for Coca-Cola. So are you buying Coca-Cola? Will you be drinking Mr. Pibb? And here is the official from Coca-Cola about the Mr. Pibb is back. I guess because, you got to go bigger and bolder than ever. You can't just bring back regular, boring old answer to Dr. Pepper, Mr. Pibb, right? Who's Mr. Pibb? That's kind of funny, right? That they had Dr. Pepper. He's a doctor. You can't argue with the doctor, but it has to be a person, Mr. Pibb, I guess. But yeah, the revived Mr. Pibb features 30% more caffeine and a bold, spicy cherry taste with hints of blah, blah, blah. So I guess there is a extra caffeine and a bold cherry flavor. I guess it's 2 of them. So there you go. That's and it's supposed to connect with multicultural exennials. Hey, Ivy. Ivy, are you an exennial? Do you know what that is? No. My daughter's down here. Yes. So what is an exennial? Somebody put it in the chat. And let's stop sharing the Mr. Pibb. Yeah, and Stevie said it tastes like an intensely sweet cherry with hints of caramel and a spicy cinnamon-like bite. You sound like some sort of wine snob, like an aficionado when I would try a whiskey or something like that, and it would say it has right notes of caramel and essence of floral patterns of begonias. And I'm just like, I taste whiskey. I don't know what the hell you're talking about. But yeah, there you go. Often compared to, somehow I'm wondering, Steve, if you copy and pasted this. But hey, you know what? You do you. Yeah, KDP has been body slammed. Could be a recovery story. I also tweeted about, oh, by the way, I did some market research this evening. I'll start it off by saying, first, we went to Costco. And over here, I got some Dave's Killer Bread. I've never had it before. Dave's Killer Bread from Flowers Foods, ticker FLO, is the #1 U.S. organic brand from what I've read. And it was on special for $8.29. You get 2 loaves So we're going to try it out. We're going to see what it's all about and how killer it is, if it's amazing, if it's wonderful, if it's as incredible as advertised. People are like, what is he talking investing? We're tying it in. We're going somewhere. So after we were done with Costco, which, yes, $250 we spent, but we stocked up on things, bought some Guinness, which I'll probably have one afterward, but this company doesn't pay a dividend, and I wanted to do some market research by using the Perks app. So we went to Portillo's. They had a special when you use the Portillo's Perks app. I just feel like I'm doing an ad now. When you use the Portillo's Perks app, you can save a bunch of money, right? It was National Sandwich Day, so this whole weekend they were doing, if you spend $1, then you get a sandwich for $1. So my wife and I each downloaded the Portillo's Perks app and got a beef sandwich, and it was fantastic. And we ordered a small fry to go along with it. So each of our orders were less than, I don't know, it was like $4 and change or something. So, hey, take it when you can get it, and look for a Portillo's coming to you. I liked it. Still as good as ever. I did submit it already. Here you go. You got an amazing 37% upside. Oh, they're thinking it can go that high. What's FI? I don't remember FI. Or is that an L? And Duolingo, not sure what the value is, don't want to trap. Yeah, that's interesting. And I put in if you guys tell me what you think, how many of you get the newsletter? I updated it. I redid it. I talked with Steve and a few other people and got input and thought, you know what? It could use a little bit of a change. And honestly, this was more fun for me to put together because I didn't feel like I have to cram and find something interesting to write about that you may or may not be interested in. But with the latest newsletter here, we put... It's sharing. It's, I don't know, I guess a little bit Tim Ferriss-y. I don't know if you get his 5 bullet point Friday, I think he calls it. But what we did with this, and I'll explain it a little bit. And by the way, you go to dapperdividends.com. You can sign up for the newsletter. But first off, I receive 5 Seeking Alpha articles that I can gift a month. So Steve, baby, you said you liked it in the past when I've linked to an article. So why don't I just do that every newsletter? I'll find something interesting, dividend related, it's behind the Seeking Alpha paywall, and I'll share it with you guys. So this one was Samuel Smith wrote about 3 dividend traps to avoid before they wreck your retirement income. And he touched on the yield max funds. And, it's a lot of stuff we understand and know, but I thought it was a really good article. But then I got a quote of the week. So tying in with your value trap, Warren Buffett in the 2000 annual shareholder meeting, talking about Berkshire, said we look at the business to see what we're worth, not the stock price. And he's talked about that. He's done that with every one of his investments, that you don't really want to focus on the stock price. You want to focus on the business economics, the fundamentals, to know if the company's doing well. Much in the same vein, if you were looking at buying the corner cookie shop and they're a one of one, they're not publicly traded, well, how would you know if the company was doing well? How would you know if things were going well? Kind of the same thing with a company. So, and also what Warren also loves about the stock market is he would say in a negotiated transaction, it's extremely difficult to get a bargain because the seller wants the highest price they can get, and the buyer wants to pay the lowest they can, and they meet somewhere in the middle. But man, in the stock market, things can be really disjointed and get really crazy and out of whack because you can have tons of people just selling on a whim. So, thank you so much. We do appreciate that so very much. Thank you for... How's my wife, everybody? And then to wrap it up, I'm going to put a couple YouTube videos. This week we had Brian Bollinger from Simply Save Dividends. Really cool under the hood look on SCHD. And then I found this interesting. Jim Cramer with his Mad Money. He shared his stock picking secret, what he looks for, the method to the madness. And that was good. Then a couple podcasts worth listening to, self-explanatory. And then, hey, we'll give a news article. Just I thought it was interesting that Mr. Pibb's coming back. You remember Mr. Pibb, Jen? Mr. Pibb. Yeah. Coke's bringing it back. Don't you read the newsletter? That's a lie.
I live with the newsletter.
So anyway, everybody, that's oh yeah, and then just to wrap that up, if you're not familiar with the newsletter, I share the dividends I received, what I bought. But look at the buy and sell. Doesn't this look a little bit schizophrenic? That he sold 5 shares of SGov, but he bought 1 share. And we can get into it too, but I bought the 1 share of SGov earlier in the week. Zoetis had their earnings, and they beat earnings, but they missed, their forward-looking guidance was not what Wall Street was expecting, and it dumped hard. So I talked about this with Ryan. I put in a market order for just below what it was at, and it never hit on Friday. So we'll regroup. So that's why it looks like he's buying and selling SGov in the same week. And then I share some stocks that are going ex-dividend this week. My latest video is always there. Seeking Alpha, having a Black Friday sale. So you can get a 20% off your first year, blah, blah, blah. And then I do a random music video, and that's the newsletter. So that's the new format. I don't know if you like it or not, but I don't know who that is. I don't know. Jerry. Who's Jerry? I don't know if that's a reference. I honestly don't know. Radical thinking AT&T, no dividend, we're out. I was shocked too. No, I don't know who that was. That was, yeah, okay, guys, good. We're talking about Zoetis. So real quick with Zoetis, holy crap, I'm way back in the... All right, with Zoetis, my thought is, yes, I'm going to buy more. Even though it was a full position, I think it's overblown. Long term, I think it's fine. It's kind of like Zoetis caught a cold. They didn't catch cancer, or I guess you don't catch cancer, but I don't think this is something that is going to break the business. It's just, they're just saying that the stock market doesn't care about where you've been or where you are. They care about where you're going. That's the most important thing, is the future. And yeah, the past is important, but they lowered their guidance. It doesn't look like they're going to have as much growth as was expected. So the market punished them for that. And for long-term people, could be a fantastic opportunity. I didn't see that. Yeah, his dividend of 2K. Well, I guess if you just print the money, you can do whatever you want if you're the government, right? Pibb needs to go back to grad school to compete with Dr. Pepper. That's funny. That's funny. A vinophile? I don't know, man. I thought aficionado was better, right? Rich, no problem, man. Appreciate that. And as you say that, oh, dude, what happened to my light, Ivy? My light strips off. What's up with that? It was just on. Hold on, everybody. Oh, this is the most important part of the show. Hold on. See, it's... Oh, hey, we got to order a new one. Call up Amazon, Ivy. Do you see that? Mm-hmm. Yeah, she's really... You can tell she's riveted by it. All right. That looks a little better, right? Dude, I've had that thing like 5 years, but some of the... I don't know. Anyway, so Rich, no problem. I was going to say I was on the Stennis. That was, yeah. Notre Dame. That's where I was going. Notre Dame beat the heck out of Navy last night. But you know what? Those are midshipmen anyway. I was the working class Navy, you know? All right. Let me catch up here. Thank you so much, everybody, for tuning in. Mike, I appreciate that. And this way will be a little bit more, I think it can share a lot more information that might be more meaningful to all of you instead of some of my thoughts. But yeah, let's take a look, Steve. We'll put it on the list with waste management for, or I'm sorry, Steve. Mr. J. Mr. J.O. Oh, when I was probably doing for Portillo's, right? I like those, man. His wife helps him make that stuff. Good. And Steve, that's helpful. Um, it was a heck of a lot easier for myself to put together, and now I will be able to just keep track during the week. So I have, a little file, whatever. So I listen to a ton of podcasts. I'm always reading news and interesting things. So yeah, Yield Max is I, you guys know me. I won't buy anything Yield Max. I haven't. I, I took some crap for it back, I don't know, early summer, especially when I did that interview with Marcos Mia. And oh my gosh, I had to give up. There was so many people attacking me for, yeah, it was just no bueno. All right, and then we're gonna do news. There's a lot of news on Simply Save that we will get to. Oh, D's, yeah, you shared the drip too. That was great. I wish there was. Maybe I can post it in the next newsletter. That would be funny. You know what? I did. It's funny because on Blossom, somebody had said that they lost their job, but took out a loan, like $100,000 loan to buy just, I think, like ULTY and MSTY. And I was just like, oy. Basically, they were saying they were putting everything into it. And they're like, yeah, with the dividends I get, I think I'm covering all my expenses now. And just, holy cow. And I was almost hoping that person wasn't serious, but I think they would have been. Yeah, with Guinness and Diageo, man, it caught my attention this week when it was at $86, but it's a very well run company. Just young people aren't drinking alcohol anymore. When I was my daughter's age, she's 18, I was drinking alcohol. We were sneaking. We would just have people buy it for us any way we could get alcohol, our hands on alcohol. I mean, it was fun. It was forbidden, but the young kids now, I don't think are drinking alcohol. Anybody drink alcohol?
Oh, absolutely.
Oh, well, that's what you didn't tell me that. This could change my whole investment thesis in Diageo. Why don't you pull up a chair and we'll have a discussion about 18-year-olds and alcohol?
It's mostly just drugs. So drugs and smoking, especially vaping. Oh, that's terrible. So many vapors around our school.
A lot of kids your age vaping, huh? There you go.
Disgusting.
That's Altria with Juul, and yeah, don't vape. That's terrible. But anyway, my thoughts are that their Diageo's sales are clearly declining, and we're in a weird period now where globally less people are drinking alcohol, and it's probably good. Like I've told you guys, I used to drink alcohol every night. I mean, it would be 1 to 2 beers, but I cut that back a few years ago. I only drink on the weekend, and yeah, it's because it's a treat, I guess. Bill, you prefer the old newsletter. I thank you for that, but yeah, I just had to change it up, and I could tell that there's a lot of times people you can tell. I'll leave it at that. Limit on Zoet. Oh, dude, are you serious? 85? Man, if it got down to 85, oh, buddy, that would be tough, man. You know what? You are fun. It's funny because I'm reading this old book by Peter Lynch, and he talks about that exact thing. Is how when he finds one stock, he would research it, and it would lead him to other stocks that looked better. And yeah, it's kind of like that. Like he shares a thought that a lot of times when you look at your holdings, there's not a bad one. It's almost like competing good ideas. So you got to pick one. But yeah, and it's interesting. We're approaching year end, and I might do something on this. But I was just reading that. Yeah, Peter Lynch. This was 1991. This book came out. I think he said. This is a useful year-end review for any stock picker. Go over your portfolio company by company and try to find a reason that the next year will be better than the last. If you can't find such a reason, the next question is, why do I own this stock? So I was like, I should do that. Go company by company and find a reason why this company will be better than the year before or the year right now. And if you can't find a reason, might want to look at moving on from it. What's up, man? There he is, out in the land of Ohio. We will get to news in a minute. Yeah, Waste Management looks like Costco, Visa, TJX, all companies that are solid. I only own Visa of the three. And that's something for a company like that. You almost have to just pay fair value. I mean, if you want to wait to get 10%, 20% down or something, you might be waiting a long time, and it doesn't always. Let's see. I don't know, man. Perhaps, but I don't even know it. I can't even keep up with all those. All I know is that they charge a big expense ratio, and almost all of them, from what I had seen, have serious NAV erosion, and they underperform the reference asset almost no matter what it is. And I know even ULTY, right? That's like almost like their fund of funds, I think. But they all underperform over time. So, and that's on a total return basis. So I can only guess what some of those are about, but I don't know. I guess it's how you define solid. I just, again, not for me, whatever. If they work for you, if they work for anybody else, God bless you, Godspeed. I just, I won't be. Mr. Pibb doesn't put on airs like that, Dr. Pepper, flouting his doctorate around. Yeah, what is he a doctor in anyway? I'd like to see his doctoral certification, his Memory American Dad stance. That's funny. Mr. Pibb's my kind of guy. Dude, that's brilliant. That's some good writing right there. Dude, that's funny. Thanks. Yeah, I guess Darth, I didn't look at those other ones, but honestly, I don't know what they're about. So you say individuals, so I guess I don't know. What are they? Yeah, I guess so. But and I'm guessing Soxy, if I'm assuming, because I know Sox L, which is a 3 times leveraged semiconductor direct from Direxion, I think. But yeah, that one's been fantastic. So I would assume that's kind of similar. It's probably tracking that index. Let's see. YouTube was bragging. There's a Portillo in Texas that pulls down 19 million a month in revenue. That's the I think that's the Dallas one where they did like a hub and spoke. So I think that one was just almost breaking the model, and they couldn't keep up. So they tried building satellite positions to like siphon off some of the demand. And I think those ones weren't working out so well, something like that. Yeah, 19 million a year. I was going to say, dude, if it's doing 19 million a month in revenue, oh my God, that's more than the whole entire company, right? Wait, I want to see this one. If you quit drinking and you get 2 jobs, you have more money. You don't have more money because you have 2 jobs. You have more money because you quit alcohol. Yeah, that's interesting. But for me, I think everyone has to have a vice, and people that say I have no vices, don't trust them. I don't remember who gave me that advice, but whether it's chocolate or I don't know, hopefully all things that are, well, see, it's funny as I say legal, my libertarian roots want to kick in and say, well, weed was illegal or is illegal some places, but I guess I would preface that just for my own sanity is to say if it's agreed upon between consenting adults, then I think you should be able to. If that's your vice, then that's cool. All right, we're all caught up. We will. There, UL2 is up. That's too much. I still stand by the higher the yield, the higher the risk, and that hasn't done me well. All right, let's let's get to the news right quick and see what's going on. Let me make myself small first. So this is going to be from simplysafedividends.com. I know it's coming. It's coming. It's coming. There it is. All right. So we left off here. My Main Street Capital raised that dividend 2%. I'm not buying them here. In my opinion, they are too expensive to buy, but too good to sell. So I'm in a hold. And I've shown you guys that when I factor in I have 150 shares. When I factor in all the dividends received, I'm down to just under $26 a share now from my cost basis of 37 and change. And we got another special dividend. Yeah, right there. They raise the dividend, then they're also going to pay another special dividend of 30 cents per share. It's just been wonderful. You guys heard this news. Everybody's covered it. Kimberly-Clark. I don't get it. I think they're overpaying. What is their market cap right now for KMB anyway? Let me see. That's crazy. So check that out. Kimberly-Clark's market cap is $34.5 billion. Granted, their stock got crushed this week, but what is that? 40 billion? I think it's 40 billion they're paying for Kenvue. Yeah, the market doesn't like it. I think they're diluting shareholders, and yeah, I don't know. I don't know what they're doing. Kimberly-Clark was struggling. Kenvue has been struggling since it got spun out of Johnson & Johnson. So I guess maybe they think you take two struggling businesses and put them together and they're going to do well. I don't know. We'll have to see. Nobody's seen this movie before. Just like I was telling my daughter when she doesn't understand how the Bills lost to the Dolphins. And I said, any given Sunday, and that's what makes life so interesting. Also investing. Nobody knows what's going to happen because none of us have ever seen this movie before. We may have seen movies that ended or work similar, but not this exact specific one. So share your thoughts. What do you think about Kimberly-Clark buying good old Kenvue? Let's move. Oh my God. We're going to go really quick here. So if you see something you like, pause the video. If you want to read the little blurb and see Simply Safe's valuation, what they think it's worth. But Capital One raised their dividend 33%. Emerson Electric, ticker EMR, 5.2%. That's almost their 70th consecutive annual increase. So shout out EMR. Iron Mountain with a 10% dividend raise. Cadence, what is this? Huntington Bankshares is acquiring Cadence. I did not read anything about that. They reaffirmed the score, reaffirmed Stanley Black & Decker's safety score. Roper, ticker ROP. I think they're a dividend king as well. 10% 33rd. It's like he's saying they're a dividend king. Yeah, 33rd raise. Who else do we get? Atmos Energy. And let us know if you own any of these stocks or you're buying any. Like Atmos Gas Utility Company, 15% raise, their 42nd consecutive annual increase. Becton Dickinson. Or is it Dixon? Becton Dickinson, yeah. Ticker BDX, 1%. That's their 54th year of consecutive raises. Conoco. One of you out there is buying Conoco. Ticker COP, 7.7% raise. I told you, there's a lot, man. Sun Life, ticker SLF, 4.5% raise, which is 9.5% dividend growth over the past year. Because check it out, they keep raising that dividend almost every freaking other quarter. Yeah. All right, couple more. Evergy, ticker EVRG, 4.1% raise. CH Robinson, stock shot up this week, as well did JB Hunt, 1.6% dividend raise. And couple more. Snap On, 14% raise. So that was nice. And I missed them. Boy, I should have bought them earlier. Last one. DuPont spun off their electronics business and they reset the dividend by 51%, which was expected. That is ticker double D. Whew. So I saw in and out. There we go. We're learning, Dresh. Thank you, man. I love you educating me. Dr. Pepper was named after Charles T. Pepper, who had a Doctor of Medicine degree. The store owner who created the drink named it after Dr. Pepper. He was in love with the doctor's daughter. Ah, that sounds like a movie or something, right? Oh, Jay, we got to look at your waste management too. Yeah, let me catch up. We'll drop back to that. VTV. I have never looked up VTV. We'll look up that on Seeking Alpha and see what they say. Performance Trucking got the contract for In-N-Out Burger. I did not know that. All the Californians that moved to Oregon have to go there. Oh, that's interesting. Huh. Yeah, that's true. And honestly, like talking about Portillo's, that's just, if you guys don't know, I'm here in Chicago, in the Chicago suburbs, and Portillo's it's my fun position to hold. I love holding it and knowing every time I drive by a Portillo's, I'm like, yep, I own that business, which is what's really cool. I think we can lose sight of that when we buy a stock, we're literally buying a business. And every day, the stock market, you can own any business that you want to, and that's publicly traded. I think that's so cool. So for me, the bugaboo with Portillo's, and I met Dick Portillo. I worked in his house before he sold it. They want to expand more and more coast to coast and between Canada and Mexico. And we don't know if it's going to work. The market doesn't know if it's going to work. It's taking a lot of money to build out these restaurants. They're trying to get costs down to build them and make them cheaper. And you know what? Will it work? I don't know. But if it can work in Chicago, why can't it work anywhere? This is one of the more, right? Chicago is a diverse test market in and of itself. It's why things like, they closed it now, but did any of you ever go to the Cosmics, the McDonald's? They wanted to compete with Starbucks, right? I think they nixed that. But yes, their regional or their global headquarters is in Chicago for McDonald's. They opened one in Bolingbrook and a couple in Texas as the test markets. So if Portillo's can work here, I think it can work anywhere. But we'll see. You know what? For me, I have 200 shares, average $6. It's $1,200 for me to, it's a super minute position of our overall portfolio. Yeah, you think you might try and catch KMB? We'll see. Again, nobody knows what's going to happen. It's too funny, Michael. More importantly, Kimberly Clark doesn't know what they're doing. Hey, that's yeah, and that's the thing, Darth. I don't know. It can, just because they have a lot of products, right? It doesn't automatically mean that it's going to be good for the long-term viability of the business, but we'll see. Dresh isn't going to buy. I'm not buying. I'm going to. Oh, look at this. Dude, from talking about Canada. What's up, Mo? Oh, dude, my condolences, man. I was pulling hard for the Jays, for the Blue Jays, Toronto Blue Jays, but yeah, man, that's a tough one. 2 outs away. Well, I don't want to rub salt in your wound, but buddy, it happens. And you know what makes me feel better? When I was so hardcore over the top into hockey, I've taken a lot of my hockey energy and put it into investing because I have more control over it. And at the end of the day, when I would watch some really tough Blackhawks losses, I'd say it's entertainment. At the end of the day, it's entertainment. I had nothing to do with the outcome of the game in any way, shape, or form. I didn't influence it. And the closest you could be is if you were at the game and you were cheering. Like, that's all you can control, is cheering and screaming for your team. But that's it. Remember, whether all these sports, it's entertainment, and you have little to no control over the outcome of that. Dresh is waiting for ADP's dividend hike. Hey, it'll be nice to see some of the government data. And I know we've been looking to companies like ADP for payroll data. They're already saying it's almost hitting recession levels with the amount of people that have been laid off. So we'll see what happens with that. Yeah, I don't know. If we see $4, I might pick up another 100 shares, but I don't want it to be too big. I just like being a itty bitty teeny tiny position to know that, really so 200 shares at $6. Does it ever go back to 15 or 20? I don't know. I have no idea. It would be a pleasant surprise if it does, but my expectations are incredibly low on that one. I don't mind it. I really don't, but I know around here, people lose their minds if you put ketchup on a hot dog. So I'm impartial to it, but I guess around here, literally, people will excommunicate you from Chicago. They'll pull your card. They started Cosmics because they helped launch Chipotle. Yeah, it didn't work, right? Cosmics didn't work. Hey, what's up, Hassan? Nice to see you again. He's going heavy into Clorox. And we're going to look up, Jay. We're going to go right now so I'm almost caught up. We're going to go look at waste management. Yeah, just remember, man, it's entertainment. That's what I used to have to tell myself. I'm not joking. I am not kidding. I would be so into Blackhawks games that if they lost, I'd have trouble falling asleep. And when they won in the playoff games, I would have trouble falling asleep because I was so amped up. And yeah, I had to Steve, we'll look at Diageo for you. That was my mantra to start calming me down. Like the Maple Leafs, right? Who is their ownership group? MLSE, Maple Leafs Sports Entertainment Group. I think but sports entertainment. It's entertainment. We can't allow it to not let us fall asleep. And so when it's over, it's over. And there you go. Sometimes you don't get that chance, right? You want to go Clorox, but you want to see the future first. And sometimes it could be too late, right? But all right, here we go. Now we are going to look at, and we'll see. I think maybe there's tax loss harvesting already. People are doing it early. Don't forget at the end of the year, a lot of people like to, on positions they're down, and this has been historic, right? Peter Lynch even talked about it in the 90s, is that year-end tax loss harvesting when you can sell your loser and then you can offset, I think it's up to $3,000 of capital gains, which is like dividend income or something with that loss. But sports, when is DraftKings profit? I have no idea, but more people are gambling. So let's look now. I promised, Jay, you've waited long enough. And we're going to share for you this one. Waste management. And I have been looking at them, but I looked at them this week and I'd love to know your thoughts too. What kind of bothered me. So waste management, their dividend yield 1.63%. Simply Safe will show you thinks they're reasonably valued. They upgraded their dividend safety score in December of 2024, and they bought Stericycle, which is medical waste. So they are trying to expand the business. Yeah, waste management is everywhere, although they are not our garbage company. That's Groot, which is owned by Waste Connections, which is a Canadian company. Dividend growth for waste management is average, but they raised the dividend 10% in December of 24. So we have another dividend raise coming up soon. But yeah, this is Simply Safe, how they get that valuation. This gray shaded area is a 5-year look back of the price to earnings ratio, the average. Then they go 10% above and 10% below that number. And that's your, I want to make myself smaller here. And that is your range for overvalued and undervalued. And they think that when it is below the gray shaded area, good time to buy. When it's above, it is probably overvalued and you should wait. So that's all that expected price means. That when you look back at the price to earnings ratio currently over the past 5 years and you go 10% above and below, it gives you a range of 201 to 245. So Yeah, and their PE ratio, look at that, 4.25:1, which is below the 5-year average. So it's hey, waste management below 200 looks like it is a good. But what bothered me was, and I don't remember, let's find out. Yeah, their payout ratios look good coming back. I think that was probably from the Stericycle, right? They might have had lower cash because they or maybe not. I don't know. I don't know what I'm talking about. That was 24 they acquired, so I'm assuming that might have, but then it's like a boost, right? They have to take a hit to buy it, but then it should help grow the business and increase their sales and everything if it's synergistic. But yeah, they have good sales growth. Let's see. Total sales still going up and to the right. And they slightly diluted shareholders the last 12 months by 1 million shares. What didn't I like here? It might have been their debt. Yeah, really healthy margins. Free cash flow margin 10%. What that means is 10 cents out of every dollar coming in the door in sales is making its way to free cash flow. And with free cash flow, you can pay a dividend, carry it as cash on the balance sheet. You can buy back shares, do things like mergers and acquisitions. It's a very important metric is the free cash flow to the business because it's actual cash, right? It's not an accounting number as much as earnings per share is. But yeah, here their net debt. So currently, and it came down a little, but 75% of their capital structure is debt. That's a little high. I don't like seeing it that high, but if there's a company that's going to be able to keep paying it, it is Waste Management. And here, looking at the interest coverage ratio, this ties into their debt. Kind of like you, are you able to pay the interest on the debt that you owe? The ICR is a look at the EBIT, right? How many dollars of operating income, or also known as earnings before interest and taxes, or EBIT, does a company have to cover every $1 of interest on the debt? They like to see $8 of EBIT to cover every $1 of interest on that debt. Currently, a little bit low, $5.09 for Waste Management. And why you want that higher is because it gives you wiggle room, right? If you have a couple years of, I don't know, a black swan event, you have really low earnings for some reason, and you need to be able to cover the interest on the debt, because if it's legally they have to pay the interest on their debt or they're going to have to go bankrupt. So that's kind of what bothered me. I didn't like seeing the debt and the dropping interest coverage ratio. And then because I promised you, let's see what Seeking Alpha gives. So the quant gives it a hold. That is the automated system, right? It's Seeking Alpha, proprietary. But when we look at the analysts, couple buys, strong buy on Friday, November 7th, because Waste Management, the garbage collector AI can't replace. And look, we got the whole gamut. We have a strong buy, a hold, and a sell. So there you go. You're gonna have to make the final decision on that. Let's see what they give on DEO, because you were wondering about. Oh, you wanted to know their safety score, Steve. Oof, sell, buy, hold. All right, so they say hold. Quan says hold on Diageo, but I wanted to look up because I don't remember who asked it. Was that you, J. Ortiz? VTV. Vanguard Value Index Fund. Oh, this is the ETF version, I think, of VVIAX. Yeah, I own this in my 401k because I'm really limited, and it's a smaller position. But the quant says hold, and yeah, I think Berkshire is one of its top holdings. Let's see. Yeah, so VTV and let's try that again. Here. It invests in stocks of companies operating across. Here, this is the word I was looking for. Value stocks of large cap companies, and it tracks the large cap value index and Dow Jones US total stock market float adjusted index. And financials make up 25% of it. JP Morgan, Berkshire, Exxon, Walmart, J&J, AbbVie, Home Depot, Procter. So yeah, I could see why you're comparing it to SCHD. So let's see, the quant, what did it give? The quant gives it a hold, right? I want to remember. Yeah, quant gives it a hold, and then let's SCHD, which by the way, Brian Bollinger did a nice job on that. There you go. The quant gives it a strong sell. So if that was choosing between the two, it would pick VTV and yeah, hold, buy, sell, hold, buy, sell. It's a pattern. It's the matrix. So there you go. Take that for what it's worth. And then lastly, Steve just wanted the score on DEO. 90, very safe. And oh my God, that dividend yield pushing 5%. And so they cut the dividend, did they? I must have missed that. Or is that because they're foreign? No. Oh yeah, was it a slight reduction maybe? It's tough to tell because they are right. I thought they're from like England, right? They're not. And it's an ADR, isn't it? I know. Somebody let me know. I thought it's an ADR. Anyway, it's a strong company, but it's just you have to make a bet on the future of drinkers in the world, you know? All right. Let me get back to you. Yeah, Trevon, we'll go before we get out of here in a little bit. We'll look at NDAQ. That's NASDAQ, right? I think. Yeah, VTV, man. I believe that is the ETF version of the mutual fund I own, VVIAX. I don't know if they have a history of acquiring companies. That'd be a great question for ChatGPT. Let's see. I know up in Canada, Circle K, ANCTF knows how to do this. Isn't that one and the same? Isn't ANC, is that Alimentation Couche-Tard, right? Alimentation Couche-Tard. Yeah, there you go. They want to buy 7-Eleven. Juan, dude, I don't know if we talked, man. Thank you for your service. Please put it in the chat. I got to know what branch and what was your MOS or rate and what years did you serve? I'd love to know. Comcast has a ton of debt and it's a buy. So yeah, and nobody knows what's going to happen. As long as they can keep paying the interest on the debt comfortably, shouldn't be a problem. But it's funny that all debt eventually has to be paid back at some point. And that's why, right, a lot of companies just want to kick the can down the road. But if you don't have any debt, it's incredibly hard to go bankrupt. It would take a very, very talented management team to file for bankruptcy if they have no debt. So, that's one of the things that you always have to keep in mind. And strong sell, I guess you're asking why. SCHD, I don't know. Brian says it's probably a great time to buy. It's just, the market's soured on it. Trevon, you are in luck, my friend. NDAQ. Yep, NASDAQ. I think I have this on no, I don't have it on a watch list. Play portfolio. So there you go, NASDAQ. Most of you are familiar with the financial exchange. But yeah, it looks reasonably valued. Just really quick. Yeah, founded in 1971. See their dividend growth. 12 years dividend growth streak. Yeah, they grow the dividend really fast. I guess as long as people are going to keep trading and there's lots of action. They're at the upper end of the reasonably valued range. And it's funny how some of the stronger companies usually trade in that range. Although there are periods where they're way under it for a while. So it could be, you might want to wait a little bit looking at that. But again, nobody knows what's going to happen. Yeah, you'd love to see the dividend yield above the 5-year average and the forward PE below the 5, but they're both pretty much in line. And it's a good company, so you may not get a Yeah, really, really nice payout ratios. The dividend is very well covered. They just had a record, probably, I'm going to guess. They never had that much free cash flow per share. Yeah, strong company. Sales growth, double digits or mid 20s, low 20s. Let's see. Yeah, I wonder why that is, that their shares just shot up. That's interesting. I wonder what that dilution was about. I wonder if they made an acquisition. I don't know. You would have to do some digging, but yeah, margins are just okay. Would expect that a little bigger. Yeah, free cash flow margin. Look at that. Because it's probably a very capital light business. It doesn't take a lot of capital intensity to run it, right? I think Aaron Rodgers just took a safety. Oh, anyway, so my daughter's watching football back there. 26 cents of every dollar coming in the door in sales is making its way to free cash flow. How about that? That is very nice. And their debt coming down low. So Trevon, man, yeah, their ICR could be a little bit higher, but yeah, I think it's a great company. I mean, if you can get it to pull back into the low 80s, I don't know that, but that's why we say sometimes you got to pay up. Just pay a fair price. That's the best you're going to do for a great company, because honestly, if you know it's a great company and the whole world knows it's a great company, why would it ever trade at a super steep discount? You know? I don't know why it would. Most people don't know why it would, which is meaning it's not going to. So I visited a financial advisor. Oh, good point, Rich. I did and I didn't. We interviewed her, and I think it would have been about $400, but I went to ChatGPT and Claude and told them my situation and that what we were looking for, and to ask us questions. And it basically said we're on the right track. It gave us a few recommendations, but yeah, I don't know. We still haven't. We didn't. Yeah, we didn't. This guy. Army is the best branch. Army of the Dead. So, Juan, you were in the Army from 2001 to 2005. Combat engineer, one tour in Iraq in 03 and 04. Dude, thank you again for that. And yeah, as for myself, I was on that boat, that right there, the John C. Stennis. I was on the boat, and I was in from 96 to 2000. So, well, I'd say 99. It was the extreme tail end of 99. So, let's see. Jack, what's up? Skeptical on anything food right now. Wendy's, Chipotle, DR Horton, Shake Shack, and Eats. What is Eat? Is that Brinker? You know what? It could be a sign of the recession. It could be a sign of maybe it's already here. It's right on our noses. People are eating out less. I mean, I haven't looked at all of those. That's funny. Ain't ready for the Marines yet. I have not heard that one, but one popular one is, we'll say that the Marines are Department of the Navy, and their retort will be, but we're part of the men's department of the Navy. Yeah, I don't know if I would go that far, because some of these people are, CFAs and CFPs and have all these, I want to look at this for you, Hassan. Let's look at TGLS. I don't know what that is. So we'll look at that before we see TGLS. Technoglass. Oh, I should probably share my screen. That would help. So, otherwise, you're going to get to look at my eyeballs looking off screen, right? There we go. There it is. Technoglass, everybody. Never heard of them. Building products. Dividend safety, hey, no, unrated, but that sometimes those are the best when analysts don't follow a company, because they can fly under the radar. Now let's check them out real quick. They manufacture, supply, and install architectural glass, windows, and associated aluminum and vinyl products. Blah, blah, blah. Storm Armor. Huh. I've never heard of them. A lot of brands I've not heard of. Founded in 1983 and based in Barranquilla, Colombia. As a dividend growth investor, that's yucky. So, but that could also be if they are Colombian. I don't know. Is it the Colombian dollar? That could be currency fluctuations against the U.S. dollar. I don't know. We have to look that up. But let's see the fundamentals. What was their market cap? 2.3 billion mid cap. Okay, so low free cash flow payout ratio. Hey, free cash flow. It was negative. You don't like to see that. You'd have to know why. But they have done very well lately. Buying back shares, sales going up and to the right. Return on invested capital. So their margins have been compressing. So they're just okay. Hey, this is fantastic. It looks like starting in 2018, they aggressively paid all of their debt down. So that is really cool. I don't know much about this business, but apparently they have very little debt. Because I think if they had zero debt whatsoever, I think the interest coverage ratio would be blank. So that's crazy. And there you go. Talking about ICR. I mean, they have currently $68.60 of operating income for every $1 of interest on the debt. I mean, it's a joke at that point. So yeah, I don't. Let's see what real quick if anybody's carrying them on, covering them on. Well, there you go. On Seeking Alpha, they give it a strong sell, and there's some of the analysis, very sparsely covered, but there you go. So you got hold, sell, buy, hold, buy. I don't know, man. I get skeptical on some of these that are, yeah, interesting. See, and if you know more about I don't know any of that. That's an important metric that 95% of the sales are in the US and they're expanding. That ties back into what we were saying about Zoetis and that the market is forward looking. So the most important thing is what's going to happen tomorrow, but that's also the hardest thing to know, right? The future is unknown and unknowable because of trillions and trillions and trillions of free will choices that happen every second of every day. And you just don't know of how they're going to turn out. Yeah. Oshkosh does tank carrying. I've worked at a few Oshkosh facilities up in Milwaukee. And Uncle Sam's misguided children. Yeah. Michael, building on your point without putting it on the screen, one of the reasons that, so I had two, I guess they're great uncles that were in the Navy during Vietnam era. And when I was, I was 17 when I joined, and I was thinking, I was thinking about Marines or Army initially, but they talked me into Navy. My grandfather was in the Coast Guard during World War II. But the thing that sold me is my Uncle Bob. He was a chief petty officer, storekeeper, CHS, chief petty officer, storekeeper. But he had said that if you're in the Navy and you're on a boat, you're going to get a bed and 3 hot meals, basically 3 hots in a cot. You're guaranteed 3 hots in a cot, but you could be out in a tent, in a foxhole, getting rained on, eating MRE, So I was like, good point, Uncle Bob. And Navy it was. So that was a salesman's job. See, you have to tell the people what's in their best interest, right? So, oh yeah, Hess Hess Midstream. I think Kevin was buying that, right? The whole stock market will vomit if there's no growth. Yeah, and I think you're probably alluding to the AI, right? That there when you're priced to perfection, even even right, even just meeting expectations is probably going to create a sell off because like we saw with Zoetis, as soon as there's not as much growth as people were expecting, uh yeah, it's no good. Like forget it. People move on. They're going to look for that other stuff. And same thing with Zoetis. They caught a cold. They didn't catch cancer. They're not going to be growing as much as Wall Street thinks. It's still a great business. I looked at it. Their osteoarthritis, the OA is down 11%. Sales is not growing as fast as they thought. But yeah, and then it's perfectly, dude. It's the long-term focus, right? Is a penny missing over a decade of a company? It's a blip. It doesn't mean anything, but hey, but it could be a portent of things to come. We don't know. And everybody, right? That's what makes the stock market so cool is disagreement. If everybody agreed on everything, there would be no price discovery, there would be no discrepancies. There has to be some price disagreement. So and then Jack with Oshkosh, it was okay. We were just a subcontractor for them. And actually, no, that I take that back. We were working for the landlord. I think it was called Link Logistics, or Link Properties. So they owned a Bo Derek is at the game. I completely forgot what I was saying. It's funny. It was Oshkosh was the tenant and the landlord hired us to work on equipment. So technically we didn't deal with Oshkosh directly. We were there representing the landlord, but it was cool. They were like building the chassis for like tanks and stuff. So it was an interesting thing to walk out and see. I have not SanDisk and hey, up 600%. How much more they have? I don't know. It's an old company, right? Well, it's about time to hit that old dusty trail, everybody. So I do appreciate all of you. This is fun. I look forward to this every week. And hey, shoot me an email, russ@dapperdividends.com if you have any ideas or, there's anything you want to. I didn't know that one. Cool. Thanks. I didn't see they weren't building any fire trucks where I was at, but yeah, glad you guys liked it. So I'm going to get out of here. I got a Guinness or two to end my week with. So everybody, thank you for stopping by. And I really do hope to see you again next time. So long.